Hey YouTube, Coldwater from Phantom Trading here, and welcome to today's video where we're going to be doing something a little bit different. We're going to be doing some back testing, but rather than focusing on technical analysis, we are purely going to be talking about mindset and kind of how to approach the market without rewinding. We're going to be doing some hardcore back testing here. Rewinding is going to be off, but we're going to talk about how we're going to approach the market and kind of what we're thinking as we're going through and trading, rather than giving all this weight to the technical side of things. So of course technical analysis is important, but we want to practice some of our mindset here and try to identify maybe things that we can improve on in our mindset and our trading psychology, so that we can be better traders that are more well-rounded, and we have a better balance between just technical analysis versus trading psychology. So that said, let's dive into it. Okay guys, so for this one we are going to be doing pound dollar, and we're going to be doing November 2019. It's currently November 23rd 2022, but I figured let's backtest from a few years ago before COVID. We'll do November. We'll just practice some of that price action. It may or may not be similar, but we're approaching kind of the holiday season, so I'm expecting things to slow down. And all we're going to do is we're just going to trade the 15-minute. We're going to have $100,000, so we're just going to pretend we're using a prop firm account, and we're going to experiment with the psychology of that as well. Our max drawdown that we're going to be allowed to have here is obviously 10%, and we're going to try to stick to max loss of 5% drawdown on the day as well. So keep time in GMT. We're going to keep rewinding off. We're not going to rewind at all, and we'll keep leverage at 1 to 100. We can do fixed spread. I'm going to tighten it a little bit rather than using variable. Let's just say that we have 4 ticks. Actually, we'll do 5 even. Try to keep it realistic. Commission per lot 250, and then initial history on charts to about 1500. So I'm going to hit start on that simulation, and I'm going to quickly set this up. We're going to have our sessions on the left here. We're only going to trade New York session because it's the only session that I trade. So I'm again trying to keep it realistic to the way that I trade in the actual market. We'll have news here to the left. This pound and dollar news, only high impact, and we'll avoid ones that are typically restricted. And I mean, if there's high impact news anyways, we're probably going to want to stay out of certain things anyways. We'll open our trades tab over here, and then we can open up our charts. And again, I'm just going to be trading the 15-minute on this, so I'll open the daily, we'll open the 4-hour, and of course the 15-minute, and then we'll start trading it. So set that all up. Oops, forgot to actually open the charts here. So I'll just go this way. Hit this little button here, and now we got 15-minute on the left. I gotta switch 4-hour and daily though. Daily up here, and this is how I like to set it up if I'm doing just 15-minute. And of course we could do 5-minute as well, but for the sake of simplicity and because we just want to focus on trade psychology here, let's set it up this way. Okay, so diving into it, let's quickly do our higher time frame analysis here. We can see that we have a major structure break to the upside here after this pretty bearish price action. Here's our previous leg. We swept this low. Price then pushed up, broke our previous lower high, right? We had lower highs, lower lows, lower highs, lower lows. I'm counting this as a pullback on the daily. We broke up, right? And then 4-hour, I would say, is bullish as well. We'll just say that this is our rough structure here. So again, not saying that technical analysis isn't important. Of course it's important, but again, we want to focus on trade psychology. So I'm going to talk you guys through what I'm thinking as we trade through this in real time. And well, it's not real time. It's going to be a little bit fast forward, but when I say real time, I mean you're obviously watching me back test in real time, right? So I'm going to skip this forward, and we're going to go to about an hour before or about a half hour before New York open here, and we're just going to analyze the 15-minute a little bit, quickly do that, and then we'll start talking about the psychology component a little bit. So we can see that we have some supply and demand holding here. Overall, all we're bullish. This would be my swing low, swing high, and looks like we are respecting this high. Let me just check. Or we've swept it a little bit. And we can see that we probably have a good chunk of liquidity sitting below this low and this low and this low. So that's my rough analysis of this. Could price reverse off of this? Are we in a larger 4-hour zone? Yeah, we are. Does that mean that we want to short here? I mean, I don't know yet. Let's think about it, right? So when it comes to doing our actual analysis here, it looks like we have news this day. It was this NFP already, so it's Friday. Usually what I'll do is early in the morning, you want to do something like meditate. Maybe if you don't even meditate, of course, do your full markup and everything, but you want to approach the charts without having like fear of missing out, right? This is a common thing that I had when I started out trading, and it was, coming to the charts and immediately trying to get into position because I felt like I needed to trade. I don't trade every day. I haven't traded for the last 2 days, but look, I'm up on the week because I was, really patient, and I was able to take something on Monday. Again, I didn't take it right away. It was late in the day. I didn't make very much on it because it wasn't a very volatile day. But the next couple days just have not had any opportunities that I really wanted to get involved in. Or maybe I did, and they just didn't, pan out, right? Price didn't tap me into it. So I want to approach, backtesting really the same way, because this is our boot camp or our training ground in a way, where you're going to practice trading in what is really close to what a live market environment would be like, right? So again, in terms of my psychology here, I know that, I don't need to trade today. And listen, at the end of the day, whether you're consistent or not, you're going to practice this, and you're going to build the skill to find that consistency, right? So maybe now you don't have the confidence that you're going to be able to pull a positive return, but eventually that will come, again, with experience and doing this enough times and practicing, this mental component, the psychology side of things as well, right? Because you can have the best technical analysis skills. I mean, you could have gone through Phantom or, learned trading on your own. Doesn't matter if you trade Forex or indices or stocks, but if you have a poor psychology, you really can't expect to have the confidence to execute when you need to, and to be fearful when you should be as well, right? Because a lot of it is avoiding trades that you really just shouldn't be taking in the first place anyways. So with NFP being here, what I'm going to do is I'm just going to play through, and I'm actually just going to sit out of the market on this one because I don't want to, trade NFP. It's that simple. Now, does that mean I can't trade after NFP? No, I mean, I can. Let's just maybe wait 15 minutes until after this candle closes and kind of assess what's happening. So again, this is not going to be a video that dives super deep into the technical analysis side of things. I'm going to take trades a little loose here. I mean, let's just focus on trade psychology, right? Like at the end of the day, you could trade using support and resistance, or just trading with Fibonacci's and stuff, and you can apply this same thing that I'm going to be covering in this video to that, right? So it's totally independent of the strategy that you're using, but essentially kind of what I'm seeing here is prices shot down, and the other thing that I'm thinking, right, after I've seen that NFP has kind of developed, is that we've kind of shot to the downside. So there's one of two things that I think could be happening here, right? And again, this is not meant to pertain particularly to the supply and demand strategy that we teach at Phantom, but we can see that bulls have kind of taken over here. We pushed down, and one of two things is going to happen. Either price is shooting down because the bears want to trick people into thinking that price is going to continue lower, meaning that this is a bear trap, or rather the bulls would be doing that, or maybe the bears are in fact in control, right? And maybe that this is going to continue to push down. So one of two things can happen, right? So I'm just going to try to weigh the probabilities in my head like I normally do, and I'm going to try to think about whether or not I want to try to attack this, right? Now remember, it's a Friday, right? So I'm not necessarily interested in holding over the weekend or anything. We have ISM here, which is going to cause some volatility, but it isn't typically restricted. But we can see here that We've now swept this low, we've respected this demand level, and now we swept this high too. So I'm thinking that there's kind of a double fake sort of thing going on here, where bears showed that they were in control till they weren't, but then maybe bears are in control after all, because we've gone ahead and sort of swept this high. And so maybe the bears are tricking the bulls into getting into here, and inevitably maybe price is going to drop, right? We have a lot of liquidity below here. I know we're bullish on pretty much every time frame, but we could try to attempt to fade price. Maybe we're seeing some price exhaustion. We can see that it's starting to round off here, right? So again, I'm just thinking about the psychology behind how the price action is developing here. And what I'm going to do here is I'm going to enter my first position. And the whole idea behind this is I don't know what's going to happen. I'm going to pay to see what happens. I'm going to cover the high a little bit here. I know we have a big stop loss, 12 pips. That's fine. But, you know, I'm not super dependent on the outcome of this, right? Like if I lose it, I lose it. If we win, great, then we build some buffer, right? But it's not the end of the world if we, oh, sorry, I should have done this. Let me just close this and make sure we risk 1% properly here. It's not the end of the day if we take a loss, right? Because we can recover it. You know, that's the whole idea of this, right? So part of this is also building the, building your skill of losing, right? Like if I can take a loss to the chin without it affecting my next trade, because there really is no connection, right? Other than what I think there would be in my mind, right? The outcome of this trade has no bearing on the outcome of the next trade. Really, it doesn't, because we don't, at the end of the day, we don't know why the market's doing what it's doing. We're just sort of theorizing, oh, it's doing this, so I think it's going to do this, right? So I'm going to take off history on chart here so we clean it up a little bit, and let's just play through this and see if we take an L on it. Or potentially we'll take a win, right? Really don't know yet. And again, this is late in the day, so we'll see. We have a lot of liquidity that's still kind of built up here. We're floating at about 1 hour. It's not bad. But I'm going to wait until this low down here is closed below, and then we can go break even on it. And again, I'll be risk-free on that. So we're break even. And then we can see that we're starting to take this low out. And look, we're up about 1.6 R. And now I can kind of decide, you know, I know it's not a lot of R that we've made, but we've built a little bit of buffer for ourselves, right? And the thing is, you know, and again, this is the same way that I approach the live market, by the way. I'm thinking about all of this stuff. It's late in the day. You know, a lot of this is going to be circumstantial. It's late in the day. It's Friday, right? And what usually happens at around, you know, 1, 2 p.m. on a Friday? Well, price, I'm not saying it always does it, but it has a tendency to reverse. So what we could do is, what I'm going to do I'm going to hold this, but if price starts to come back, you know, I mean, I'm going to just end up holding it anyways because I have my stop loss at break even, right? So let's see what happens. We'll see if we can extract a little bit more out of this, but I don't expect it's going to run any more than that. Of course, I could be wrong, but I'm expecting some sort of a pullback here. There it is. And maybe we'll continue to see the lows break. But see, it's really losing, you know, its steam here. So I think to hold this any longer, we're kind of pushing it. Let's see if we can make maybe 2R out of it. Okay, we're continuing to break these lows, so that's good. So again, what are we practicing here? We're practicing patience, and we're practicing the ability to be able to hold through pullbacks like this, right? That's a pretty important skill. Now we're up about 2.25 R, right? We're risking 1%. I'll zoom this out, or sorry, I'll zoom into this and kind of enlarge it so that it's easier for you guys to see it in the video. But what we can do now is I'm going to continue to, you know, just be patient, and I'm going to hold this a little bit longer. But again, if we pull back super deep, again, we may want to consider getting out of it just for some profit, right? Again, it is late in the day, so, you know, I don't want to be overly greedy. Again, we can't hold it through anyways. And again, look, bears were in control at the end here, right? It was a double fake, like we kind of called out. Faked out, sweeping this low, right? Telling me that maybe bulls were in control. And then we swept the high, which faked out the bulls. And now anybody who had bought here ended up getting obliterated or break even if they trail their stops, right? So, you know what? It's late enough in the day. I'm not even going to take partials here. I'm just going to close it out completely. And we are going to take our 2.24R. Now we have, essentially, we built a buffer, right? And here's the thing. Prop firm trading accounts, I mean, even live accounts are not always going to start out this way either. It's something to note, right? Sometimes you're going to start with a losing streak. But again, you're going to have to build the confidence and you build the skills, right? Really the psychological skills to be able to trade despite the fact that you're losing, right? And continuing to, you want to continue to follow your plan and not break the rules that you've set out for yourself, right? So let's see what happens now. Look, price is going to probably start to pull back. Maybe it's just a pullback. But there you go. I'm happy that I took my profit on that. I pretty much was able to extract the full move there just on the 15 minute. So now we're going to skip through to Monday here. We'll let London play out a little bit. And again, I'm not giving so much focus to the technical side of things. I'm really just trying to approach this from a psychological perspective. And I'm trying to build my psychology skills. And this is something that you guys can practice as well. Whether you want to put on bar replay or not, I don't think it hurts to turn it on and maybe just analyze kind of what you're thinking as price plays out. But I mean, the reason why backtesting, whether you're using FX replay or software FX or trading view bar replay, I mean, you can do this exercise, right? You can practice, analyzing, like psychoanalyzing yourself as price plays through. Like, what am I thinking versus what's actually happening, and how's it causing me to react emotionally, right? You almost want to try to get yourself to visualize that this is an actual funded account, right? Like, that's a good practice too, because it's a good way to practice getting your emotions involved. Of course, our actual emotions aren't involved, and I'm not as stressed out as I sometimes would be in the live market where you have actual, money on the line. But again, you're building that muscle up, right? That's kind of the idea at the end of the day. You're building up your skill and your mental fortitude to be able to handle stressful situations like pullbacks and even losing streaks, right? So again, I don't know what the outcome is going to be of any single trade, but because I've tested and traded for so long, right? I'm running up on like some 5 or 6 years now of experience in the live market. You build the confidence and the ability to actually produce a positive return, right? And that's not going to happen right away for most people. It's just not, right? It's either going to take, at minimum, it's going to take a year, right? At maximum, it's going to take 5-10 years. Like, who knows, right? It really depends on you and if you continue to stick with it. So anyways, let's continue. I'm rambling a little bit here, but I'm trying to drive some points on psychology home here for you guys because, whether you're ready for it or not, I think it can be helpful, right? And, this video isn't just meant for people who are completely brand new to trading. It's also for those of you who, have been trading for a while and maybe you're not seeing the consistency you want yet. And maybe it's just a matter of, building upon some of your trade psychology skills. So anyways, let's quickly analyze this again. We can see we're in this 4-hour supply zone. We now have bearish order flow based on the phantom strategy, right? Again, not going into too much detail about it. It doesn't matter. That's not what this video is about. But now let's take a look at kind of what we think might happen here. So we've kind of ranged through London. It wasn't very volatile. I think this was London open up here, kind of pushed down. And let's look to the left a little bit here. Okay, maybe we have some zones here. And just objectively, right? Whether we're talking about the phantom trading strategy or not, there's liquidity sitting below these lows. We know that for, not for fact, but like there's a very, very high likelihood that there's liquidity sitting down here at these zones, right? Why? Because that's where orders tend to collect, right? If you worked at a brokerage or you're able to see, your customers' orders and you work at a brokerage, you probably see that there's orders sitting below here, right? Stop limit sell orders, right? So stop losses from buyers and people who are trying to catch breakouts to the downside, right? That's why we use that whole concept of internal range liquidity, which Blackwatch came up with, which is really great. So knowing that, right, of course we have liquidity sitting above these as well. We can see that we're in a range. We're not super volatile. Maybe we're going to grab some of this liquidity and bears are going to continue to push this lower. Or on the flip side, we're approaching this larger 4-hour zone here, which swept some sort of liquidity, which may be an indication of manipulation or something. Maybe we'll see price come and tap down into this, and maybe we can try to catch a reversal, right? But of course, the reversal is going to be, probably lower probability of working out. But sometimes I like to fade price and just, take the risk. Sometimes it's worth taking the risk on it, right? So again, the purpose of this video is not to try to show off and show you guys, okay, I'm going to get like an amazing strike rate and make tons of R or whatever. Again, what is this video about? It's about trading psychology, right? And I would expect this video is probably not going to get as many views as some of our other, technical analysis videos. But you know what? I think there's going to be a lot of value that you guys can extract from this regardless. So that's why we're making this video. And it's fun anyways, right? We're back testing a little bit. We can see, okay, price is continuing not to do much. We're kind of reacting to this zone here. It's a Monday. Let's let it play out a little bit. Okay, we're continuing to push down. We're building liquidity here. So what I'm going to do again is I'm going to, rather than trying to, fade price and call a reversal, which it could very well, react off of this, right? I'm going to take the chance and try to continue shorting this. But before I do that, let's see if, we get a reaction, we push up to those levels. Okay, we're sweeping this high. And so now I'm thinking, okay, we have bearish order flow. We have a chain. Maybe what I can do is throw a limit in and around this area. I'll do just above here. And let's see if we get swept into it, right? Again, I want to cover the highs just because I expect price may come and take out the liquidity sitting above here. We might get stopped out. Maybe, bulls will take control here and maybe we'll see a reversal out of nowhere, right? And if that happens, am I going to cry about it? No, absolutely not. Okay, we're still kind of pushing. Okay, didn't tap us in. We were pretty close though, right? So you guys can kind of see like my logic behind it. I mean, let's talk about missed trades. This is one thing I actually struggle with the most, is this type of situation in the live market especially. This is the most frustrating thing. You have, a limit order that's kind of sitting here. You almost get tapped in, and then to see it run, I mean, look, we're looking at, like, if I had moved this down a little bit, we're looking at probably a 5 to 6 hour trade on the 15-minute. So I've missed out on a huge opportunity here because I was a little afraid of, entering off of this. Now, what's the better, approach to this psychologically? Well, it would be really to just kind of look past it and, not let it affect or tilt you, right? But I find this, in particular tilts me quite a bit, and it may be different for you. You may not care about this. I think for most traders though, when you miss a trade like this and it ends up running, doesn't tag you in, it can be pretty frustrating, right? And what often happens is this leads to revenge trading. Even though you didn't get involved with the market, I would still consider it revenge trading because you're getting fear of missing out. Now you're seeing price run without you. And this is where people will start trying to short despite, the move already happening, right? So I'm going to pull this limit order off, and what I would probably do for the day is sit out, right? And the reason for that, and this is a great lesson, it's a good thing that this happened because we can kind of work on it, right? From our mindset and trade psychology perspective. I saw this happen, but I can't really be upset at myself for trying to cover higher. There's nothing wrong with that. If anything, I would have made more profit if price did tap me in, right? Of course, there's opportunity cost, and we missed out on, again, a beautiful trade. Looks like it's running 6 to 7R now, maybe even 8R if this continues, though I probably wouldn't hold it through Asia anyways. But there you go. I didn't, try to chase price after missing it, right? And here's the other thing. Was I able to call the market's direction? I was. So you know what? I can pat myself on the back for that. Not that big of a deal. So let's continue pushing on here. We can see that we've come deeper into this 4-hour zone. Again, don't want to go too heavy on the technical side of things, but from a psychology perspective, yeah, whatever. It sucks, but again, can't let it affect you and hijack your decision-making skills, and let it cause the FOMO to build up and cause you to take a trade that you really shouldn't be taking, right? I could have just as easily started shorting this, right? And to make what? A couple R? If that, I probably would have gone break even, or it would have come back and taken me out if I had held it through Asia, right? So why would I short down here if, the best opportunity was up here, right? So anyways, let's play through to the next day in New York. My kind of plan for this, by the way, is, we've already done about 25 minutes on this video. I don't want to make it longer than an hour, but I'm hoping that, again, you guys take some value out of it. So we'll see how long this video ends up being. Okay, we're about an hour before New York session, so I'd probably be half asleep anyways. That's typically what happens early in the morning. I'm really ready to start trading personally at around 8 to 8:30. So again, I'm trying to simulate, what it would be like for me to be in session at this time, right? I'm going to be a little bit more apprehensive to force a trade. It doesn't mean I don't take trades this early, but, I understand there's some risk to it, right? And that, again, that just comes with experience. It's something that, many of you probably have experienced if you're trading, London session and you're from, say the UK or Europe, right? Then you experience what I'm talking about. Maybe you're a morning person, you're not tired in the morning, but regardless, right? Okay, so straight off the bat, I can see price is starting to react to this zone where in New York session from yesterday, we saw the big move, right? So what I'm going to do now is I'm just going to wait a little bit for price to play out, right? Because again, was I ready to throw a limit order on this? No, not necessarily, right? Again, do we have a lot of liquidity sitting above this? We do. So could price just as easily come and sweep this out or end up targeting it? Yeah, it could. And what else do we have? We have ISM, PMI that's coming up. So again, we'll probably see some sort of volatility there. So I'm going to wait a little bit. Let price kind of do its thing. So we're now about an hour into New York session, 30 minutes to the New York stock market open. And let's just wait. Okay, so I had a feeling that it was going to drop, but that doesn't mean it's going to drop the entire day, right? We'll see. We do have a lot of liquidity to target to the downside as well, and it's possible we may have missed the move, but let's see. Okay, price is kind of struggling to push down, but it is doing it. So what I would probably do now is I'll just wait, right? Again, I'm not going to chase it. Did we miss a potential trade here? Maybe, but let's see what happens next. Okay, price is starting to pull back up to this, so we probably would have taken a break even. Now the thing is, do we want to continue to chase this late in the day? Because sometimes we see intraday reversals. We're in a 4-hour zone, demand level. Let me think here. Is it worth putting money on the line for this? It's a little tough for me to think and decide what I want to do here. I would definitely want to take it, but doesn't mean I should, right? Let's let it play out a little bit longer. We can decide if we want to, take this. Or what we can do actually is I'll do this. I don't want to get caught in spread hours either, but I'm going to leave a limit order here above our first sort of reaction to this 15-minute level. So I'm hoping that price will come and sweep us in and then continue to push lower because, conceivably we have a low, a weak low here, right? Oh, we're close. Close to spread hours too, so probably want to wait. Okay, spread hours is over. Now we're coming through Asia. I'll leave that limit on for a second because it's still a decent zone, and we'll see if we get tapped in over London. So what I'm going to do with this one, because it is a trade that's developing over London session, what I'm going to do is I'm not going to touch it until New York happens, with the exception of maybe I'll have like an auto BE set at these lows. Just because I'd be able to do that and leave the trade running overnight, right? But we'll see what happens. We're kind of ranging here. Okay, we're ranging. Okay, here's New York session. So now I can decide whether or not I want to stay in this. Looks like price is probably going to sweep higher here, or demand is going to start to take control. I would say supply is in control right now, right? Because we're in this larger leg. But again, we are in this larger 4-hour zone, right? So there's a lot of conflicting information here, right? I can view this as two things. Either we view this as a demand chain or as a lot of liquidity that potentially is going to get targeted. So what I'm going to do is I'm going to hold through this a little bit and let's just see if we survive it. Okay, and I'm going to go break even now because if price has to come back another time, I don't want to be in this, right? The demand is still kind of holding down here. I'm hoping that this fails. Let's see. Okay, it's kind of pushing it. And again, I'm just going to hold through the pullbacks because now we're targeting all of these lows, right? Again, could this last level of demand hold? Absolutely. I really want to see this low go, right? But let's see. Hold through the pullback. There we go. We're starting to push. And now we're going to start to see probably another pullback. We're up about 3.5 R on this, which equates to about 5.8 R in total floating. And so now we want to decide, right? Could price reverse from here? Again, look at what time we're at, right? So it's what, like 2 p.m. There's definitely a chance that price could continue lower, right? But of course, there's a chance that we could pull back and come and tap back into this, just from my experience, right? So right now, what am I struggling with? Well, I mean, that's a big part of what practicing your trade psychology is. And again, we're doing that through backtesting. You can do this in the live market. as well. And I would urge you guys to, document this in your journal. It's kind of what I'm getting a lot of this from. But usually I struggle to hold this late in the day. So what I could do is we could experiment with it a little bit and see, right? At the same time, I don't want to be too greedy and, try to hold this expecting that it's going to make me, 100R or whatever, when it could just as easily come back and sweep me out. So what I'm going to do is I'm going to give it another hour and we'll kind of, reassess and see. And by another hour, I mean another sell in this time graph here. Okay, it's continuing to push lower, so it's good. Now we're starting to see a pullback, which is what I was expecting. Here's spread hours, right? So what I'm going to do is I'm just going to close this before spread hours. We're at about 3.7R, which leaves us at about 6R net. So far I have not taken a loss, which is really, nice. But again, I'm just thinking about it. It's not about our win and loss ratio. It's purely about, how we're reacting to things emotionally. And part of this is, again, I'm building my confidence, right? Even me, I mean, I'm a consistent trader, but it doesn't mean I can't continue to grow my trade psychology skills by growing my confidence and, practicing patience, even though we're running through, the charts here at some, 1,000 times speed or 100 times speed. Doesn't mean I can't practice the patience to hold through certain things like that, right? So now when I'm in the live market and I feel like maybe I'm cutting my trades too short, I can actually practice and, I can practice actually holding my trades a little bit longer. Maybe I'll learn that and I can implement it in the live market, right? So let's move to the next one here. I'll go through London session, let this play out, and watch. This is what I'm talking about. Price will sometimes come and take out where our position would have been. It may or may not do it. Maybe we'll continue to see price drop, but look, we pulled back pretty deep there. Okay, and then we have news. What was this? Monetary policy summary, GBP. Okay, so again, high impact news. And now we're at the start of the next day. It's 8 a.m. Eastern time, right? So what am I thinking? When I have a huge news day like today, typically what I'm going to do is I'm going to assess price, but I'm not going to be too aggressive about attacking it. And I'll show you guys why. Well, typically in my experience, I like to avoid trading these days because they're really, really unpredictable. Unless I'm already in a position, right? We could have obviously held the position I was in, but I didn't. That's fine, and I'm happy with that. I'm at peace with it. But typically, what happens is, again, price moves up and down with no real semblance of like there's no rhyme or reason behind it, right? At least that I can really figure out. So again, it's kind of low probability for me to try to trade these days, so I don't typically try to attack them. I do it more in backtesting because I'm trying to push the envelope, right? And again, that's part of the trade psychology stuff that we're talking about here, right? Is like kind of pushing ourselves outside of our comfort zone. At the same time, I've kind of realized that it's just not worth attacking price if it's going to do something and I'm just not able to predict it, right? It's very unpredictable. We can see we had a big bearish push down. We've swept this 4-hour low. Now we've tapped into this 4-hour zone here. So maybe price is going to pull back, right? So I'm just kind of like, thinking about the potential scenarios that could happen here and how I want to react to it. Do I feel like I've missed out on the move? No, because I wouldn't have entered it anyways, right? Yeah, again, I was in this position previously, but so what, right? Do I feel like, price is overextended and maybe I should take a long? Maybe, but I don't want to try to catch a falling knife either, right? So it's a low probability thing that's kind of happening here if I try to take a long here. And same with taking shorts too close, right? Of course, price could continue to drop without really sweeping. That happens sometimes too. But how many times am I going to try to, or how many times have you guys done this, right? We're post news, we see price sort of playing around and it never, it ends up sweeping out, these highs and stuff in this particular scenario, right? That happens to me all the time. So again, I don't want to try to enter here hoping that it's just going to drop, right? Because potentially low probability that that's going to happen. Okay, see, it's starting to pull back, right? So one of two things can happen here. If we take out this high, we could view that as a shift into bullish order flow, where we're breaking internal 15-minute structure to the upside, right? Again, I don't want to get too heavy on the technicals, but that is kind of what's happening. Or we can view it as a sweep of liquidity, right? So again, Who's faking out who here, right? And what is your average trader thinking, right? That's the other thing. Your average trader is probably thinking short this, right? And you know what? I agree with them on that. But your average trader is also probably thinking if this high goes to try and take longs, right? Which again isn't necessarily wrong either, but we want to kind of just think outside of the box a little bit, right? We're playing chess, not checkers when it comes to trading, right? To try to play this as checkers, it's just, you're just playing every recent break. It's not a reliable way to trade, right? You kind of want to think, again, outside of the box. So there you go. Look, we're starting to maybe sweep this. So what I'm going to do is I'm going to throw a limit order here, above this. And what's my reasoning for it? Well, I'm expecting this high to get swept. Does that mean that price could come take me out? Maybe it'll come and tap into this. I mean, there's not even really a POI here, right? I'm just anticipating that this POI here is going to get swept and that price will continue to push lower. Now remember, we're reacting to this demand level down here. So again, a lot of conflicting stuff here. I'm trading against the 4-hour trend, I would say. Let me zoom out on the 4-hour. Yeah, we're definitely trading against the 4-hour trend. We're trading against the daily trend, right? But we are pro 15-minute trend. So, maybe it'll work out. But maybe I'll get swept out too. Let's see. Let's take that risk, right? Again, do I care if I take a loss? I mean, if I'm being honest, of course I do, right? It sucks to lose, but it does. I'm not letting it affect my decision making, right? And I'm not gonna, let it spiral into over trading, right? So we'll talk about that next. If this doesn't work out, we'll discuss that a little bit. Look, we swept that, and what I'm gonna do is get ready to break even on this trade because it's not really moving the way I like. It's kind of just playing around. I want to see these lows go, ideally. Okay, lows have gone. Okay, now we're at spread hours though. So I'm going to hold it a little bit through Asia. And what I'm going to do is, with this particular trade, I don't like that we're in Asia now kind of holding it. So, okay, of course we have liquidity sitting here, but look, we're kind of, a lot of liquidity sitting here too, right? So what are we doing? We're creating a wedge in price, right? So I'll hold it a little bit longer, but I do expect that price is going to come and potentially sweep us out. So we want to be a little bit careful here. See if we'll break to the downside a bit. Yeah. Okay, so what I'm going to do is I'm just going to take this for like 1.8R. Just again, because I'm not super confident that it's going to drop. Now, what's the mistake that I'm making here by doing this though? Could price continue to run? And am I going to miss out on a big trade that's potentially going to develop over London? Maybe. That happened to me, I think last Thursday or Friday. I entered a trade. I went break even way too early. It ended up running 9R, right? Now this is over the weekend it happened, but listen, on my personal accounts, like I would have made a ton of money. So, of course, was I kicking myself about it? Yeah, I absolutely was. And, of course I wrote about it in my journal and I had a little talk with myself about doing stuff like that because, I missed out on a great trade, right? And same thing, right? And so let's see what happens. Is price going to pull back? Maybe it was the right decision, right? Yeah, this would have taken us out break even, I think. Is it going to continue to push lower? I would expect, yeah, probably. Right, so again, we're just playing 15-minute structure and order flow here, but you can kind of see I wasn't expecting to do this well. I'm not going to force a loss, obviously, but let's continue to trade until we hit a loss, and we'll talk about the psychology of losing a little bit as well. So again, I don't want to be too aggressive. I just happened to hit a winning streak here. And we could talk about winning streaks even. That's another thing that we can discuss, right? I've just won some like 4 or 5 trades in a row, right? About 4 trades. So what happens when you hit a winning streak like this? Typically you get overconfident, which is, just as dangerous as a losing streak in my opinion, because then you could just as easily give it all back, right? And, again, I'm speaking from experience. I've hit winning streaks before, and typically what happens is you'll give it back because you think that, you're going to be right about the next, 4 trades after winning 4 trades in a row. It's just human psychology, right? So again, we're not talking about technical analysis here or the technical side of things. I mean, we're talking about a little bit, but I'm trying to give you guys a perspective of, what you're probably going to encounter as you're trading, right? Oops. So we can see here, we're back. We're about 3 hours into New York session. We're ranging quite a bit. We had an extremely bullish day here with London session. We had preliminary GDP, quarter over quarter for GBP. And we have President Trump speaking. When is that? Not today, on another day. So we're good still. Which is weird. I don't know why it's not showing up. But anyways, what am I thinking here? We had a big bullish day and price is kind of just ranging. Again, I don't want to be too overconfident with this. And I hope I'm demonstrating to you guys, like, you know, because I've gone on a winning streak, I kind of want to cool off a little bit before I, you know, continue to strike, right? But I'm thinking we could play capitulation shorts here. Why? Because price is overextended to the upside. And we've kind of swept this low. We've either swept this or broken structure. It's arguable, right? One way or the other. Oh no, we haven't broken structure yet. This would be my structure though. So we're still kind of respecting potentially this level of demand here. And we saw a huge reaction. But that being said, look, we swept all of this stuff to the left. So maybe we're going to see price. Okay, it looks like we didn't really sweep this. It's relative equal highs here. There's probably a lot of liquidity sitting above this. Look, if we try to short this, kind of have to accept that maybe price, I mean, this is essentially trying to catch a falling knife in the opposite direction, right? So I want you guys to keep that in mind as well. But I do want to try to short this if we can get a good opportunity for it. Ideally, if we pull back. Okay, not a lot of movement today, so I'm going to stay out then. It's fine. So we've just gone through that entire day. Again, let's push forward. There's Asia session, let that develop. And then London session, we're going to skip through because I'd be sleeping, right? Again, I'm making this whole thing custom tailored to me, but I urge you guys to do that for yourself as well, right? If you don't trade London session, don't trade it in backtesting. I mean, you can if you're learning a strategy early on, but try to make it realistic, right? Make it a realistic trading environment for yourself. Okay, so we're back here. We had London session here. We pushed down, right? So look, I was able to call the market direction. Well, it's good. I could pat myself on the back for that. Gives me some more confidence in myself. But, you know, I know that potentially because I'm on a winning streak, a loss is maybe potentially around the corner. Now, am I fearful that I'm going to lose? No. But I'm going to be cautious, right? There's a fine line between being cautious and being, you know, overly fearful to the point where you're just not executing on trades that you should be taking, right? So, again, another thing that you guys can kind of work on, right? If you find that's something that you do in the live market. But, okay, I kind of see here that we have demand starting to change. Supply is still in control overall, right? But I'm thinking, okay, the bulls are starting to get a foothold here. I mean, they have it overall, because if we look at this, right, this larger range here, you can see that news caused this volatility. I think it did anyways. News was here, but then look, we had a huge run up here, right? Either that's grabbing liquidity, maybe the bears are in control after all, despite this because this is the 15-minute, by the way, right? Or maybe they have control and price will continue to push higher and will continue to break these highs, right? So again, I'm just playing what I see in front of me, right? Now we have our President Trump speaks here, which is not a restricted news event, but it is potentially going to cause volatility. Well, this is back from like 2019 that we're back testing. So let's wait a little bit. Okay, some volatility there. And I guess we'll stay out for today. Didn't really see much. I mean, we could have longed here, but for what, a couple hours? Then again, I didn't know how far this was going to go anyways, right? And I didn't really want to hold through Trump's speech, so that's fine. Stay out of it. And let's wait for the next day, right? So there you go. You see a couple days now that I've just not taken a trade. I've sat out of it because the price action wasn't looking, you know, great. Now, I'll tell you guys another thing that I personally struggle with, and maybe you struggle with it too, is, you know, sometimes if I don't take a trade for a week at a time, I start to feel the urge to get into the market because I feel like I'm not engaged with it. And that's not a good thing, honestly. You should be trading and taking positions when setups happen, not because you feel like you're missing out. Again, at the end of the day, what's the root cause of that? It's fear of missing out, right? I'm fearful that I'm not going to, you know, catch that next trade and make, you know, the R that I want to try to make for the month, right? Again, common problem. But, you know, you shouldn't succumb to certain feelings like that, because it's not considered good trading or good trade psychology, right? Trading is about being very patient, right? And that's what we're doing here, being patient, and we're just kind of waiting, right? We're waiting to pounce, right? And when we're ready to pounce, we want to hit it hard too, right? It doesn't mean that we're we're scared to enter, right? Because I find that's again a thing that people struggle with a lot, is just being fearful, right? Because maybe they've taken a lot of losses, and it makes sense, right? You take a bunch of losses and you're going to be afraid to strike, right, when the iron's hot, right? Because you have this kind of feedback loop where it's like, I've taken losses and I've felt pain associated with that, because you're losing money or whatever. Maybe you're failing challenges and stuff. And so of course you're going to be afraid to take trades, right? So that's normal. You shouldn't beat yourself up for it, but you should do something to try to address it, right? Because that is not going to make you, it's not going to make you a profitable trader in the long run if you're afraid to enter trades, right? So again, now we have Powell testifying. So that's, what is that, at 2 p.m. I'm going to guess, later in the day. Oh no, sorry. This would not be 2 p.m. It'd be earlier. But let's see. We'll wait until Powell testifies. That's the Fed, right? Maybe we'll see some volatility there. Okay, you don't see really all that much. So what I'm going to do here is, we don't have a super volatile day yet. Maybe we will see it. But what I'm going to do is, I'm going to try to prioritize shorts again. And again, is this going to result in a loss or a win? Yeah, it's going to result in one or the other, or a break even, right? I don't know what the outcome is going to be of this next trade. I really don't. So I'm just going to do the best that I can do based on the information that's provided to me, right? And it's having that mindset of, it's not even about confidence. It's trusting yourself enough to make the decision based on the information that you have available to you, right? And sometimes that means making a poor decision, and we only know it's a poor decision in hindsight, right? So let this play out a little bit. I was expecting it would probably sweep that high. And again, what am I going to do here? I'm going to place a limit order just above this. I'll try to cover some of this because maybe price will come and tap into it. But let's see what happens. I'm expecting that price is not going to come all the way up here. Ideally, I should be covering this high. We have a lot of liquidity sitting above it. So what I could have done is also set a limit here and above here. But I feel that price is going to continue to push lower. Why? Because we have liquidity to target here and here. And this should be a weak low. Now again, does that mean that I'm absolutely certain that this is going to happen? That price is going to tap this and push lower? No. But I feel like it's a decent probability of happening. Maybe we won't even get tapped in. That would be really annoying. Now we're getting into spread hours. That's not ideal. I didn't actually want to be in that if we're that close to spread hours. But look, now we made a trading error. That's fine, right? Again, what can we practice here? I've taken a trade that, maybe I shouldn't be in. And really what I should do is probably get out, right? So what I'm going to do is I'm going to slow this down a little bit. We'll see if we can get this to break even. I'm just going to exit it. But if we take our loss, we take our loss. And what do we do after this? If we made a trading error, entering something that we don't want to be in, well, I would journal it and try to figure out why you made that trading error, right? So let's see. Is price going to push down enough for us to get out break even? Yeah. Okay, let's get out of that. Maybe it'll end up working out, but spread hours might take us out. So that's why I don't want to be in it, right? There's spread hours. It would have taken us out for sure. So there you go. I did the appropriate thing there, right? And maybe you entered it and jumped the gun for whatever reason. Obviously, it'd be different in the live market, right? You're not running through at 100 times speed. So that was more so an error of me, trying to operate the backtesting software and failing to do it properly. But there are situations where you may enter something that you realize, you probably shouldn't be entering, right? And it's like it's a full-on error that you just should not be in that trade. Maybe you should exit it and take a small loss on it, right? There are other situations though where, like I was talking about before, where I trailed my stop loss to break even way too early last Thursday or Friday, where you have to just accept the risk, right? And stay in it. And because I failed to accept the risk on that trade, I missed out on like 8 or 9 R, right? Which is quite a lot of profit, right? So let this play out some more, and let's take our next trade. we've got about 15 minutes until we hit an hour here. Again, I didn't want to make this a super long video, but I'm hoping that I'm dropping some trade psychology nuggets for you guys and that you guys actually watch this video, because I do think it'll help, especially if you are, whether you're new to trading or you're in the thick of it, you're on your journey to finding consistency. I think it'll help that type of trader more, but it doesn't mean it won't help those of you that are new either, right? Because if you come into this early and you're just starting to learn how to trade and you're coming in with a stronger trade psychology than, those of you who just, spend all your time on technical analysis, I would actually expect you'll probably find consistency faster than, the average person, because you're actually focusing on trade psychology, right? So again, let's see what happens next here. And we have more news, ton of news here, so I'm just going to kind of skip through that for the sake of the video. We have, another Powell speech. And what I'm going to do here is, again, see a lot of liquidity building up here, and I'm thinking that this is some sort of a bull trap here. So, think of it this way, right? Ask yourself this: would you be trapped into trying to take a trade here? If the answer to that is yes, and you're inconsistent, then maybe you should try playing it the opposite way, right? So remember, we're tapping into this demand level, prices pushed up, but then, it almost looks too good to try to take a long here. So I want to play against that. So what am I going to do? I'm going to throw a short on here again, and we'll see. I don't know if it's going to result in a win or a loss, but it's a matter of, accepting my risk, right? And there you go. So what ended up happening there? We took our loss. Now, am I going to cry over it? No. Does it suck in certain cases? No. Yes, it does, right? Where I feel like, maybe I didn't have the best setup, but, in this case, I think it made sense for me to take it. And so I can be happy with taking that type of loss, right? I thought that, the probability of this failing was high enough that I could throw my money on here and pay to see what would happen next, right? And I could have just as easily profited off of it, right? That's the mindset that you want to have with things like this. Now, what obviously happened was, look, this demand chain ended up holding, right? We can look in hindsight here and we can see that we ended up breaking this high. I misinterpreted this as a sweep, and demand took control and started to push up, right? I would say that overall demand was in control anyways, though, if we look at this larger picture here. But anyways, let's continue to play through this. You can see that price is continuing to push. So I've taken that loss now, and there's a couple things that we can do here now, right? Now, I know it's late in the day, so I'm not going to do it anymore, but either what I can do is I can try to fade price and switch my bias up and try to take longs, which I don't really see an opportunity to do that here. Or what I can do is I can continue to short it just higher up, right? So two options there. But here's the thing: if you take a loss on the day, sometimes it's a good idea to walk away from the charts if you feel that it's tilting you and it's clouding your judgment. But in this case, I would say, had it set up, I would have been okay with, potentially taking another loss, right? You have to accept that every trade that you put on, there's the risk of taking -1R, whatever you're risking on it, right? In this case, 1% of the account. Let's keep playing through. And here we go. We got Prime Minister Johnson speaking. Okay, so price is continuing to push up bullish, right? And so now what I'm thinking is, we have a lot of volatility here, and price is continuing to push up. If we break this high, then I'm going to start getting interested in continuing to take long. So I'm going to chase this a little bit. But, okay, there we go. Now we've done it. Let's see what happens. I'm going to throw a limit just under here. So the whole idea is I'm expecting this POI to get swept and for price to continue up, right? We should check our blind spots here and see what are we tapping into to the left here. Well, we're tapping into this wick of this 4-hour zone all the way to the left here, which is a 15-minute zone of supply. So, we're trading against that. We got to be careful a little bit. And of course, we've taken out this high, so we could see a deeper pullback. But let's see. I'll take the chance on it. Okay, we're in it, sort of reacting. Let's struggling. We're getting late in the day now. What was that? Oh, this was a Friday. Whoops. So probably shouldn't have been this anyways. But maybe you have a trade copier like me and you're trading personal accounts, so I could have held that over the weekend. So let's let this play out. Let it play out through Asia and everything. So what I'd probably do is now on Sunday, I see that high break. I'm going to go break even. And we're going to let that play out a little bit. And there you go. So this would have been... I'd probably be going to bed at around this time. So if I saw this right before bed, I'd probably close it, to be honest, because I would expect that either, London could continue, or what's going to happen is price is going to retrace after that huge move, because this happened in Frankfurt, right? Frankfurt Open. So gotta be a little bit careful here. I'm gonna play it slowly. Okay, now see it's starting to pull back. I know it's only 3.7R, but you know what? Look, we've now made 10% in a matter of what, 18, 19 days here. So we started November 1st. Look, I need to I need to drive this point home with you guys. If you have enough funding, you should really understand that making 10% for the month is, really amazing, right? I'll show you guys this graph that I actually put together, which again, kind of like, it relates to psychology in the sense that, we don't need to aim for like 100R months, especially when you're, fully capitalized. You have personal accounts and a ton of funding through different prop firms and stuff. Of course, getting prop firm funding is difficult. And I do think that prop firms, like doing challenges and stuff, affects your trade psychology in a very negative manner because of all the rules and the fact that you have to play with basically a potential 10% drawdown rule, right? Making your risk of ruin kind of artificially higher than it should be or needs to be, right? But I get it. It's a business for them as well. Anyways, let's see what happens here. I will show you guys that Excel spreadsheet that I put together in a second though, because I think you guys will get something out of it. Look, continue to push up. That's fine. I accept that, I potentially lost out on another 3-4R on that. But look, by the time that it comes back in New York, maybe we're going to see price start to reverse, right? So what I'm going to do is I'm going to take one last trade here before we finish this off, because I do want to show you guys the Excel spreadsheet I'm talking about, where, again, you don't need a ton of R. It goes as far as showing, how much you make depending on how many accounts you have per R, up to 20, right? Starting from 1 to 20. But let's quickly trade this New York session. We had a pretty good hot streak here, I'm not gonna lie. I was able to call the market direction pretty accurately. But again, that's not always the case, right? I have backtesting sessions where I'll have like 25, 35% strike rate. I could tell you right now this one's gonna be really high, right? But just kind of play through. Okay, let's think about this. So kind of swept this low. This didn't really break any highs, but we have this to target as liquidity. And then at the same time, we're pretty overextended. We're sweeping a 4-hour high. We failed to break above it, as you guys can see here. And so, let's see. And we're sweeping that same high on the 4-hour. That's this. We're bullish overall, but maybe we're seeing price action start to get exhausted, or price start to get exhausted for this particular pair. So if we took longs here, of course it could work, right? We're seeing that price is, kind of pushing up, ranging, pushing up, ranging, pushing up, ranging. Well, let's see here. Oops. I'm going to zoom in a little bit and let's just think about whether or not we want to get involved with this. I don't want to try to call a short too early until it really shifts, 15-minute structure ideally. But look, we have some things telling us that we should look for shorts. But then if we look at the 15-minute, maybe we should look for longs, right? So again, in this situation, you can either stay out of it or, we've made a lot for the month. So what I'm going to do is I'm just going to cover this low and we'll see if we get tagged in or if we take an L on it. And again, just accept the risk, right? And there you go. It's one of those frustrating things where it just goes without us. Now, I was thinking of taking a long here, but I wanted to safeguard myself from a sweep, so that's okay. Didn't end up running all that much. I'm going to close that limit out. We'll do one more trade. It would have been an easy 2-3R, right? And again, in terms of psychology, I wanted to dispel the myth that, you have to make, 10 hour per trade on the 1 minute. Like I'm proving to you guys right now, right? It was super easy for me to make this 10 hour, right? And taking 2 and 3 hour trades. You don't need to make 5 hour per trade even, right? You can make 3 hour per trade. Who cares? Just have a high strike rate, right? And by the way, it's a lot easier for your trade psychology to trade this way, which is why I've, switched to trading on the 15 and 5 minute. It's just easier. It's more fun. I can, I don't have to have my eyes glued to the chart all the time. I don't get faked out on the 1 minute as much. I don't get swept out anymore. There's the pros and cons, right? And again, when you have enough capital behind you don't care about, trying to make 100 R. You're just undercapitalized trying to make too much R, right? And again, I'm going to show you guys that spreadsheet in a second. Let's do one more trade in New York session here. See that we actually get tagged into it, and then we can play. I can show you guys that spreadsheet. So, okay. Essentially have demand kind of holding here. Well, demand sprouted this large move up, swept, order flow shifted to the downside. I would still say this is bullish 15-minute structure, but what I'm going to do is I'm going to try to fade price now. We've kind of jumbled, or not jumbled, but we've kind of ranged around enough and started to show intent to push to the downside that, I am interested in trying to take shorts to target at minimum the liquidity that's sitting below here. So what I'm going to do is I'm going to throw an order up here, and let's see if we get tagged into it. Oh, we're close. It's building liquidity. Okay, we're in. That's a good sign, right? It sort of fakes some people out here. There we go. That's really good. So what just happened here, right? If you're trading the 1 minute, maybe you would have seen this as a larger 15-minute zone. It absolutely is. So maybe this would have been your first mitigation of it, right? And again, this is a little bit specific to the phantom strategy, but we can see price came, tapped into it, and on the lower time frame, we started to produce bearish 1 minute order flow, right? So I would have definitely taken some sort of a short here on the 1 minute. You probably would have gone break even, right? So, you would have gone break even on that. What ended up happening, we mitigated deeper into the zone, right? Effectively, we saw a bull trap here as well. Maybe you were thinking on the demand side, look, we're holding demand, we're bullish, and you see price start to react here and retest, and maybe you're even able to pull 5 R out of that on the 1 minute, right? Nothing wrong with that. But what ended up happening here? Bears were in control overall. We haven't seen this fail yet, so we'll see what happens, but at least we're seeing some sort of reaction, and we can see that price, is effectively starting to take out the bulls that were sitting here with their stop losses below it, which is going to cause price to gain momentum, right? It's going to start to accelerate down potentially now, and there you go. It does it, right? So now we're sitting at 4R here, almost at 14.35R, and what I'm going to do here is, let's see, it's a Tuesday, it's 2 p.m. I'm expecting we're going to see some sort of pullback here. We're, already up on the month quite a bit. 20 days in, we've made 14R. What I'm going to do is just close 60% of this so we take some profit on it. Obviously, if you're trading the 15-minute, by the way, and you're probably not going to want to take partials as much because it really shunts your ability to profit on trades, which is why I've stopped doing it. It makes sense if you're trading the 1 minute and you're just, essentially scalping. For the 15-minute, though, I like to keep full volume of whatever my trade is and just exit either 80% or completely. Most of the time, I'm exiting completely and holding full volume, though, to be clear. But in this case, I want to secure some of that profit. Let's see if we continue to drop or if we're going to, pull back here. Okay, so we continue to drop. We have high impact news here. I'm going to set this break even. So what could happen now? Really quickly. Well, we have high impact news coming. We have a gap below this. This may or may not show in some of the data that, the data that you're using on TradingView if you're charting with them. But, and depending on whatever the data feed is. But what I'm going to do now is I'm just going to close this out because, look, we're near the end of the day. We have high impact news. This could just as easily, have a huge candle to the upside. Could also be profit taking. There you go. It's starting to pull back, right? I'll just play through there. Okay, it looks like it's continuing to push down. But not bad. Look, we were able to make 15R. And this is a really good equity curve. Again, not typical. I usually take more losses than this. But look, I hit a winning streak. That's fine. That's not the purpose of this video. Again, it's to show you guys that, well, essentially to walk you guys through my trade psychology as I backtest. in a very realistic manner, by the way, right? Because again, I approach this the same way that I would approach the live market, right? So essentially, I mean, we can see that this ended up working out pretty well, but why did this work out well? Again, I don't want to, toot my own horn here or anything, but the reality is I have enough experience that, I'm able to avoid making common mistakes that, maybe most other traders make because they have poor trade psychology skills, right? Did I succumb to overtrading or FOMO or revenge trading? We could have hit a losing streak on this. I still would have posted it, right? Had we made like maybe 5R or whatever, or maybe we went into drawdown. Just to illustrate to you guys, how I would continue to trade, right? And maybe we would try to recover it or whatever. But I didn't succumb to any of these things because, again, I have direct experience trading in the live market, and I've made all the mistakes, right? I've lost money because of these stupid mistakes, right? And they're not stupid. I mean, it's just, again, it's human nature, right? It's typical that you're going to fall into those traps of, over trading or, trying to make a lot of R, stuff like that, right? So again, I hope this video was enlightening for you guys. I hope, again, that you guys end up watching it. But anyways, I want to quickly show you guys my spreadsheet here next. I'm going to quickly do that and show you that you don't need to make a lot of R if you're properly capitalized. All right, guys. So sorry, I know this is going to be a little bit dry, but I still think this is really cool what I've put together here. I've just put together, a bunch of different prop firms and stuff, some of which that I trade with. But it's just to show you guys, like, look, okay, with one account, right? Of course, you make 1R, you're going to make about 1,000. By the way, I've switched this to dollar CAD from US dollars. So it's also, it's not, or no, actually it is showing the profit split as if it's, you're earning 80 and they take 20% of it. So that's all factored into this formula for everything here, by the way. But anyways, look, with one account, right? Make 5R. I mean, this is someone's salary. There you go. That's great, right? And that's why everybody tries to get into funding with one account to start with. It makes sense. But we move on to 2 accounts, and that very quickly doubles, right? And that's just making 5R, right? We made 5R in like a week, right? It's not that difficult to make 5R. I do think it starts to get difficult when you start talking about making over 10R per month. 10R is something that's good to shoot for, but look, even making 5R is great, right? With 3 accounts, that quickly triples into 16 grand. We're talking about effectively 3 times the average, salary here in Canada, which is, this is a substantial amount of money. Of course, you have to pay taxes on it. But, depending on where you live, this may be an even larger sum of money, right? And then, look, with 4 accounts, and look, it's updating because it's using the actual dollar CAD quote. 4 accounts, we're looking at 20K, 4 times, right? 4 times the salary, the average salary of somebody who lives here in Canada. I actually think the average salary is a little bit lower, but now we're getting into the territory of you're making essentially, I think, 240K a year, right? If you're able to do that consistently, and that's making 5R, right? And what I'm going to do, just to show you, and why I've marked this and bolded out, 3R here, is look what happens when we get to 4 accounts, 5 accounts, 6 accounts, right? Making 3R, you can do that. I don't think it's that difficult to make 3R per month, right? So that's a good benchmark in my opinion. And once you start to get, capitalized with some 8 accounts, and this is just even trading the 15-minute, it's not that difficult to make 3R, right? And that very quickly balloons into, if you have 8 funded accounts, we're looking at 25K a month. That's some 5 to 6 times the average salary in Canada, monthly salary in Canada. Like, that is crazy. You make 5R that month, maybe you do really well that month. With 8 accounts, you're looking at 42K. That's a ton of money. You get to 10R, you have, what some SMC traders would consider, an average or a low month. I mean, this to me is an outstanding month. If you're able to produce 10R, 10% gain for that month, I wouldn't expect to make that every month, right? And I don't, by the way. But look, with 8 accounts, you're looking at, $85,000. That's a healthy salary where I live, like in my country, right? And in some countries, this is going to be even more, maybe a little bit less, but this is a ton of money in my opinion, and that's making 10R, right? Now, of course, if you're going to be trading the 15-minute across all these different accounts, they have different rules and stuff. It's more to manage. You have to invoice each, prop firm. If you're trading with multiple ones, you probably will be, because you can usually only have about 3 or 4 accounts per, right? But say you have, your 4 FTMO accounts, 3 E8 accounts, and then another 3 MFF accounts, right? And of course, they're going to have different spreads and execution times and stuff like that. But if you're trading the 15-minute and you're able to make 3R, look, with 10 accounts, looking at 32K. Like, that is a ton of money, right? So again, it's just about training your psychology to understand that you don't need to make a lot, but you do have to be able to make this money with consistency. That's the important part, right? So if you're not consistent, if you're not consistently able to produce a positive return of 3 to 5% per month, then you have work to do, right? And I urge you guys to take a look at your trading psychology, because it's very likely that is what is holding you back, right? It's not the technical analysis stuff. I mean, if you've been studying technical analysis for some 1 to 2, 3 years, you probably know what you're doing already, right? And it's probably more your trade psychology, and that you're second guessing yourself, and maybe you're overthinking your technical analysis, and that's causing you to find inconsistency in your trading strategy, no matter what you trade, whether you're trading supply and demand or SMC or whatever it is, right? Or you could be trading support and resistance, or just chart patterns in general, right? But again, my point is, once you have enough capital, look, if you somehow are able to get 16 accounts, which it's totally possible. There's a ton of prop firms. Again, I don't know how good some of these other prop firms are. I've never used them, so I can't recommend them. FTMO, E8, I think they're great. MFF is pretty good too. They have a good history of actually paying people out. So look, if you're able to get 16 accounts, you make 3R, you're looking at someone's whole salary here, 50K. Like, that's nuts, right? So that's kind of the point that I wanted to make here. And again, I hope you guys were able to get some sort of value out of this trade psychology video for once. I know we did backtesting in it. We talked a little bit about technical analysis, but I'm telling you guys, like, a lot of people I think just gloss over trade psychology, and it shows in your P&L and your consistency, right? Because you're making errors that are honestly, they're not easily avoidable, but they are avoidable if you work on your trade psychology. So anyways, I will catch you guys on the next video. Hope you enjoyed. I'll talk to you guys soon. Bye.